Hello, everyone, and welcome to the Investing with IBD podcast sponsored by Vantage Point. It's July 27th, 2022, and on the show with me today, I have Irusha Peiris joining me, Justin Nielsen, and of course, Irusha Peiris joins me every week. He is the one of the portfolio managers at O'Neill Global Advisors. How are you doing this week, Irusha?
I'm doing well, Justin. You can't get rid of me, so I'm
Right,
here.
exactly, as much as we try. And you might notice that I have a different background today. I am actually in the office. We have a number of the members of our content department that are in the office visiting for LA. So it was one of those cases where they were going to have a dinner. And typically, when someone offers to feed me, I show up. So that's why you're seeing the background of the office. But
And you saw Ed
Arusha,
Carson walk
and you
by.
saw Ed
Just
Carson walk by, so a little cameo there. So you might be seeing this is one of those virtual backgrounds that has people moving in the
I
back.
think I see half of Chris's head
Yep.
over your
There's
left
a half of
shoulder.
Chris. Yep, right there.
Yeah.
We might get an alley sighting. She's in town, so it's been nice to see people. But a few things that we're going to talk about on the show today. Of course, we just had the Fed meeting. The the announcement of a 75 basis point rate hike. We'll take a look at what's the effect on the market. We'll take a look at the market in general, and then also we'll kind of talk about surfing the market, what that's like right now, and we'll end with a few stock ideas. So, Arusha, why don't we start with the Nasdaq? Pull up the Nasdaq, and I mean, what a day we had today. It's a very very strong day, and we're right back above that 12,000 level that was seeming to provide some resistance. What's your take right now?
Well, it was, as you said, a really strong day, especially after the reaction to the Fed news, right? So the Fed came out around 2 o'clock uh, Eastern, and 75 basis points, everything pretty much as expected. And the market just took off. Why? I'm not sure. It's almost like kind of the machines or the algos just kind of ran up everyone at that point. But and it was kind of strange because the Fed also said, oh, demand is slowing down and things like that. But that being said, I think the bigger thing is everyone just got so negative over the last few months
Mhm.
that it is normal to have a counter trend rally, a bear market type of rally. And so I think the odds are you were still in a bear market. That being said, it is my opinion, and that really means nothing. The big thing is up 4% on higher volume. It is another follow through day, an additional follow through. And so we really have to see how the market acts in the next couple of days, right? Because a lot of times the market will have a strong reaction one or the other to some major news like a Fed announcement. But then it kind of things settle down, and a lot of times the opposite happens in a couple days later. So we'll have to wait and see. It's over 12,000. The kind of the critical area for the Nasdaq, the resistance is that 12,300 level. So it
Right.
needs to get over that too. But the reality is under pressure. But there are a number of distribution days collecting, so that's kind of for the bears right there. Right, it's still a little uncertain, but you are over the 50-day, you're over the 21-day. You have gotten a number of additional fall through days, and the market over the last month or so has been a lot more resilient than imagined. Right, it's had plenty of opportunities to come and test the lows of the market, but every opportunity it's had, it found its footing and was able to move up higher. And I think today was yet another example because yesterday it finished pretty poorly,
Hmm.
and so today it was a pretty strong move. And so this market might want to run a little bit more and catch those who were shorting the market for and catch them a little offhand here.
Right. And one of the things that's been kind of tricky is that the volume has been really low. I mean, yesterday, it was higher than Monday, but Monday was the lowest that we had seen since June 3rd on the Nasdaq Composite. So we've been having some really low volume, even going into the Fed meeting today. A lot of low volume. I think a lot of people were waiting to find out. Okay. I think the 75 basis points was expected, and they just wanted to make sure that there was no surprises. And I think that was the big takeaway from today, was that there were no surprises. So it just kind of allowed things to move. One of the reasons why we stayed under pressure is that there's still a scarcity of breakouts out there, and that's one of the things that's causing a little concern. For some of us, I mean, we're playing more ETFs than anything, because the individual stocks just aren't providing that many opportunities. And it's funny, because we talked so much about that follow through day undercut that we had right after the initial follow through day. And again, if we just go back in time there, you see that the follow through day was on the 24th of June, and the follow through day undercut, where we closed below the low of the follow through day, that was on June 28th. And that's usually a very negative signal, and usually leads to a rally failure. But the one thing we've had, as you mentioned, Irusha, we had all of these follow through day, these subsequent follow through days that kind of give you a sense that, hey, maybe we can kind of rally. Now, we also, not too long ago, went through the 2000 to 2003 bear market, and how many rallies we had, some of them very powerful. The 2001, of course, after September 2001, that was a 40% move in the Nasdaq Composite. So, just because it's a bear market rally doesn't mean it can't be powerful. Doesn't mean it can't be traded. The biggest problem right now is, what do you buy? What's actionable? What is setting up properly and trending? Because I feel like right now the biggest issue I'm having is anything that I buy, it trends for a couple days, and then it seems like there's a rotation into something else. What about you? How have you been handling this on the individual stock side, Arusha?
Yeah, a very, very small, just having incredibly small positions, not too many positions, and it's just more those probes just to see if I'm getting knocked out. Now, I got knocked out of one of the stocks. So I had two probes. One was knocked out. The other probe is still hanging in there. So yeah, I'm still very cautious. When you look at the kind of the composition of the industry groups, right? It's still very defensive.
Yeah.
I mean, let me just pull it up here. I mean, it's nothing very growthy. Let's see. I mean, you still have a bunch of energy in the top three. Now you have a retail discount variety, some medical outpatient home care group, some consulting, and the biotechs are now up to number 8. We've been talking about biotech, and there's 800 stocks in that group, and so a lot of money has gone into that. So that's probably the one growthy type of group in the top 10. Then you have some other medical. So a number of medical stocks have come in to the top 10. So it's still a little bit more defensive in nature, especially even besides the biotech, the other medical groups are much more conservative, much more defensive related. If insurance was in the top 10 at one point, right? So
utilities
yes,
were
exactly.
kind of moving up there for a while.
Yeah. So I think that's the market's telling you something there, that it's not our type of market. But as you said, we could have a tradable rally here, a powerful bear market type of rally. And so you could buy some things. If you see some stocks to buy, you can buy them. If you see some ETFs, you can try those. But play small. Don't get too aggressive until proven otherwise. Until maybe if you start making progress on some of those positions, right? And that's usually how it works. A lot of time for me, the way that I kind of get back in sync, because I always get, when we go through these kind of either bear markets or pretty tough corrections, I always have a tendency to get too negative, right? And just assume that it's never going to work again. But then I see a couple of stocks that I like. I try them very small, but then I notice they're starting to work. And after a week or two, I might try a little bit more, go a little bit larger positions. And eventually, especially after a follow through day, and you start seeing more and more of our growthy related type of stocks break out, you have more opportunities to buy. And after 3 to 4 weeks into a real rally, I'm suddenly maybe 60%, 70% invested, maybe more than that. So the market will truly slowly pull you in when that time is right. And it's not pulling me in that much. It's pulling me in a little bit, but not that much. And so that's always been the biggest indicator, most important indicators, like you said, Justin, the stocks, how many stocks are
Right.
setting up. And there aren't that many. There are some, but there aren't that many to really force me to get more and more invested in the market.
And this has been one of the issues we keep on, I guess, complaining about to a certain degree is a lot of the strength seems like it's coming from some of the most beaten down areas. Just today, I mean, two of the top stocks were PayPal and Datadog. I mean, you look at those charts, and this is not the typical Bill O'Neill. Let's buy points here. I mean, these are charts that are 80% off their highs, and still the downtrend is well established here. There is no right side of the cup or base in any way, shape, or form on these are still at the bottom. So how do you kind of, I guess, when the things that are moving are these stocks coming off their bottoms, what do you do in that case?
Yeah, and I think it really just depends on the type of book that you're running. So, for the most part, when you're an individual investor, like we are, for you're mainly running an absolute book. You have
Hmm.
the luxury of going in cash. You don't have to play in the markets. And so, when I see a Datadog in PayPal, I'm not even considering it because
Hmm.
it's so far away from they're so far away from setting up right now. Uh, so I they don't even come on the radar a lot of times for me. Uh, but the problem is that, and this is probably for more institutional, and we're trying a little bit of kind of relative books internally and stuff like that. When you look at it from a relative perspective, and you have to be invested in the market all the time, and even if you're right, and you're in stocks that are holding up the best in the market, they're showing some great relative strength. There's going to come a point in that market cycle, there's going to come a week or two where you have a PayPal and a Datadog or a number of other stocks that have gotten beaten up 60, 70% off their highs. They're going to have tremendous rallies. Some of these stocks are going to go up 100% in just a matter of weeks. And if you're managing a relative book and you're having to deal with a benchmark, all of a sudden
Right.
all that kind of gains that you had, you're losing them rapidly to all the junk off the bottom. And so that's why it makes it kind of that's why it's so hard and from the fund world to outperform the market, because you have to be in there all the time.
Hmm.
And uh, and if you're trying to just be in stocks that are closer to 52-week highs and stuff like that, there's always going to come a time where a lot of the other stocks that have gotten crushed, they're going to start reverting to the mean a little bit,
Right.
and your stocks aren't going to go anywhere. They're going to go down, and so you're going to start underperforming for a little bit, and that's where the pressure really comes in. So it really just depends. So for us and for most of our listeners, yeah, if you're running absolute books where you can go into cash, don't worry about it, right? You stick with the stocks that are closer to 52-week highs. Try a couple of them. You don't have to buy breakouts, because breakouts aren't going to always work in bear markets. But you want to be in stocks that are within striking distance of going into all-time highs. You can buy on the pullbacks and stuff like that.
Hmm.
But the most important thing is you kind of stick with the same discipline. Get the traction, prove to yourself that you're making traction. It's just been too hard using our style over the last month or two to really gain any traction in the market consistently.
Yeah, and you know what? Before we close this segment, maybe we can take a look at some of the other indexes. The S&P 500, while not as strong as the Nasdaq Composite in this latest rally, it has gotten above its 4,000 level, so I think that's notable. But kind of like that 12,320 level on the Nasdaq, it looks like we've got this 4,177 level that we've got to look at for the S&P 500. But I also thought that it was a little interesting that the Russell 2000, now the Russell 2000, we often use IWM, which is the iShares Russell 2000 ETF. This has gotten, the Russell 2000 has gotten above 1800, 180 on the Russell 2000 IWM. And, it's, the pullback looked a little bit sharper on the NASDAQ, whereas the IWM kind of held up a little bit better. And usually people think of the small caps as a little bit more of that risk on. Um, anything from looking at the other indexes that's giving you kind of some indicators of where you should be, Arusha?
Well, if you look at the more on the indices, they're all above their 50 days,
Hmm.
and honestly, they've all kind of built a little bit of a trading range that when you look at it, you're like, maybe there is a tradable kind of rally here. That's kind of the first thing that I noticed. They're above their 50s, they're above their 21s, and it's been a long time since you had a decent rally to make everyone think that maybe this is truly the bottom, which
Hmm.
it could be, right? I mean, we don't know. I mean, it very well could be the bottom. Maybe the market always looks out 6 to 9 months ahead.
Hmm.
Um, so, so yeah, when I look at that, I could see it. They don't look as bad as, but they don't look terrible. They don't look great. They're still in downtrends, but they're at least trying to fight. When I look at more the stocks, it's just more the number of stocks that it's
Yeah.
just a smaller percentage of stocks that are setting up that has me more concerned and tells me that it's better to still be patient. It's okay. You don't always have to get the bottom.
Right.
I'll never get the bottom, and I'll miss out on the kind of that first initial rally. But you can always make up with it, especially since with the way we do it, where you concentrate more in a few
Hmm.
positions, and a lot of times when everything lines up, those things dramatically outperform the market.
Yeah. And I mean, just as a reminder, after the 2009 follow through day in March, after the devastating great financial crisis in 2008, it really did take a few months for growth to really come on strong. That one did
Yeah.
start with a lot of bottom fishing, a lot of the most beaten down names kind of rebounding. And again, it's not like all the troubles were over, right? In March of 2009, there were still years to kind of work through a lot of those excesses that were going on. And yeah, so yeah, this could be the bottom, but it also, even if it is the bottom, doesn't mean we're in a rally yet, right? You can have a lot of sideways activity. 2011, the global recession fears during that period of time remind me of what can happen. And you can have months and months of sideways activity where you don't make progress before you finally kind of come out of it. So when we come back, we're going to kind of take this analogy of surfing to the markets and how to handle some of your positions, risk management, and so on. So stick with us. We'll be right back. Hey, trader, listen up. The markets have changed. Have you changed your strategies? Vantage Point can help you conquer volatility. Learn to trade with AI. Visit www.freestockcoaching.com and discover how to predict market trends 1 to 3 days in advance with up to 87.4% proven accuracy. No matter which way the market moves, Vantage Point's patented AI can give you a massive edge. Visit www.freestockcoaching.com to get what you need to find your best entries and exits. That's www.freestockcoaching.com. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. And welcome back to the Investing with IBD podcast, sponsored by Vantage Point. It's Justin Nielsen here, along with Irusha Peiris. And this week we were thinking we would talk a little bit about surfing the market. I know Jim Ropel has talked a little bit about kind of his analogies with surfing. This kind of came about because yesterday I was on vacation. I had family visiting from Denmark, and we went on wave runners. We went to the beach down in Newport Beach here in California. And you can see a little burns there on the top of the head. So that's my proof point. But there's a lot about surfing that does seem to be kind of analogous to the market. And one of the things that kind of strikes me the most is how patient you see some of those surfers being out there. And I feel like we keep on talking about patience. It's one of those things where again, you go early in the morning and you'll just see a bunch of surfers, like Huntington Beach area. They're all lined up. They're just waiting for that right wave, and they pass up a lot, right? Because it's just not the right moment. It's their positioning isn't exactly right, and so a lot of times it's waiting out there. Arusha, have you ever done any surfing yourself?
No, I haven't done any surfing. I did when I moved here years ago. I was doing a little boogie boarding,
Okay.
and I caught some waves
Hmm.
that kind of carried me all the way into the beach, and it was pretty amazing actually. And then I was like, okay, I get why
Right.
people get obsessive about this, because it was kind of it was just kind of mind-boggling that you're just
Mhm.
carried so far. But to, getting back to that analogy, that's essentially what we were talking about in the first segment,
Yeah.
right? And
Mhm.
I think once you go through a couple of cycles and see how markets behave and how the stocks we look for behave, when everything lines up,
Mhm.
you learn to appreciate those kind of moments right there. And then when you don't see it, you learn to be a little more patient. Now, obviously, during that kind of process, you're hopping on that surfboard for what you think is a next great wave, and you're wiping out left and right. So you're getting hit, you're making your mistakes, all that stuff. But you eventually learn that if you start taking too many shots when the time is right, when the time is not right,
Mhm.
you're gonna stop yourself out. You're gonna wear yourself down, and you're gonna be too tired. You'll be on the shore by the time the great waves are coming that are gonna be able to carry you a long distance. So that's why, like, and I'm assuming that we've been pretty consistent at this when we talk about the markets over the last few months, that it's not the time, it's not the time. Right. Even though you have some of these powerful rallies, what that kind of make everyone think that maybe this is really powerful, maybe it is the right time. But when you look at kind of the stocks and everything else, and you have a little bit of that experience to lean on, you realize that this is not the same kind of environment that it was a few years ago or in
Yeah.
other great bull markets.
Hmm. And to your point, I think one of the things that's attractive about the stock market, like surfing, is when you kind of catch that wave, and you're like, oh, this is what it feels like. This is what it feels like to have the right stock or the right wave, and to be able to carry something for a while and to get a real meaningful profit out of it. I think that's what really attracts a lot of people to it, and makes them want to keep on trying to get those winners, because the reality is, and I've done a lot of analysis on our IBD 50 list, looking at Bill's portfolio, my own portfolio, and the reality is, it's not like you have to have a lot of wins to make it big. It's very few wins that you're really having a big material impact on your portfolio. That's what does that's what does the most for you. It's there have been a couple uh, analyses that I've done where it's about 8 to 10%. 8 to 10% is where the majority of your performance or outperformance will come from if you're doing a good job at this. And so you can have a lot of a lot of stocks that you're wrong on, a lot of waves that you pass up, and it's just catching those few that are really right. That's what's going to make the whole difference for you. So I think your point is, exactly, whether you're boogie boarding or surfing, once you kind of catch a few just right, and sometimes that means, being at the right place at the right time, right? The positioning is important, and your timing of, really kind of catching it at the right time and not chasing it. You have to kind of be where the wave is. If you're seeing the wave kind of break, 100 yards to your left, well, guess what? You're not going to catch that. That's just too far away, and you shouldn't go chasing it, because then you're going to be out of position for maybe the wave hitting in your area. So, what else about surfing and this market kind of strike you as analogous here?
I think consistency.
Hmm.
Right, you're kind of doing the same routine. So you're talking about all those surfers, and I see it here, near Manhattan Beach over here.
Hmm.
Those surfers are there all the time, right? And they're very consistent. They're there in the early mornings. There's plenty of surfers in the evenings.
Yeah.
It's part of their lives, right?
Hmm.
It's a routine. Uh, I'm sure as they integrate it into their life with their jobs and things like that, there's a point where they're automatically, it's just at 4 o'clock in that day, maybe after work, they just head towards the beach. They have all the stuff there
Right.
that they need, the wetsuits and all the surfboard.
Probably a routine.
Yeah, exactly. They have it
Mhm.
all there. They're not thinking about it too much, because you start thinking about something too much, you're not going to do it. And it's a habit, right? So it's just part of their life. And
Mhm.
so that's the only way you're going to catch that big wave, right? And we've talked about this before, but Laird Hamilton, we would play like Laird Hamilton's video, and I think it's still on YouTube. But he was on Charlie Rose,
Right.
and Charlie Rose is asking him, what drives you to do this, and describe catching a big wave and all this kind of stuff. And the way he described it is the exact way that Bill O'Neill would talk about stocks, where you have to be there every day. You have to prepare that the big wave is coming, or the next great stock is coming today, and you have when it comes, there's no hesitation. You got to hop on it. Now
Mhm.
there are going to be plenty of these waves or stocks that, like you said, Justin, they're not going to work out, right? They're going to get stopped. You're going to get stopped out, or maybe they're going to go up 20% and that's it.
Mhm.
But then there, of once in a while, and especially at the beginning of a new bull market, you may catch one of those next great leaders, and then it's not that hard to catch the next great leader. It's the hard part is managing it,
Yeah.
right? And just like I'm sure some of those 100-foot waves that I see some of these guys surfing, that's probably a little bit hard to manage something like that, right?
Uh,
So it's the same thing with stocks. I've been in all of these kind of great, huge book, monster winning stocks over the last 15 plus years. And very few did I manage them extremely
right.
well. I managed some of them okay and things like that. So that, I think that is one of the harder parts. Now, I think the other hard part that people don't realize, and this is probably the hardest thing, is the environments, especially when you're getting started out learning this. And I got started out in 2000, so it took me 2.5 years to really even see a good, like, real good bull
Yeah.
market, right? Studying and using Can Slim. But the hard part is being, participating in an environment where you can actually get some practice at buying great stocks, breaking out in a great market. They don't come around that often. And so those windows open up only so many times. When they close, kind of like they've closed after 2020, yeah, we're kind of just sitting on the sidelines for the most part,
Mhm.
waiting. Yeah, it's just been just a lot of waiting, and kind of getting frustrated sometimes once in a while, buying stocks and things like that, and trying small positions. But that's the hardest part. It's because you might have to wait a few years before you even get a chance to put some of these things that we're talking about in action, where you
Right.
can actually get some experience. And I think that's the hardest part, versus any of the other kind of professions out there, where you can consistently, work on math, or work on medicine, or work on carpentry. You can just get up and, do that stuff pretty consistently. You don't have to wait for a bull market to practice being a heart surgeon, right? So
Mhm.
so I think that's the hardest part that catches a lot of people off guard, because they initially think that you should be able to make money all the time in the market. That's not the case.
Well, and I think, what some people don't realize is with a lot of those professions, let's just take heart surgery, for instance. That's something that takes a lot of time. And there's something that I feel like some people are thinking of the stock market more as a lottery type thing where you just have to be lucky. And why am I not making money? Because I made money in 2020. Why am I not making money now? And, with some of these professions, even like, let's say heart surgery, I mean, look, not every heart surgery comes up, that often, right? In order to kind of
Right.
get your feet wet in a lot of different surgeries, I mean, you have to have the right surgery come up for you to even get that practice. But there's also a huge element of risk management here, because look, I was sitting on the beach with my son, and he's 8 years old. He's not a swimmer. He doesn't like getting water in his face, right? I'm not going to go bring him out in waves, right? That would just be silly. And I haven't surfed enough to where I would even go in a situation where there were big waves, because I just
Mhm.
know that my experience isn't there, and look, if the water's too choppy, if it's, the weather's not right, there's a lot of things that you can look at and say, hey, you know what, maybe there are going to be some waves to catch here, maybe there are going to be some stocks to catch here, but there's too much risk to make it not a good scenario for me, that it is better to just wait and watch from the shore until the weather improves, until the conditions improve, what have you. So I think, risk management is a huge part of this that some people forget, and that's why we stress so much that when you get into a stock, it's important that you have your exit strategy, right? I mean, the last thing you would want to do is if you were not a strong swimmer and you didn't have good skills, you wouldn't want to be in one of those big waves if you didn't have a way of kind of getting out of it before it tumbles all over you. There's just a lot of things here where it's important that you're there at the right time, but also, you have that patience to not chase everything, to sit there and wait for the right thing. And look, there are some of these waves that kind of go for a long time, and maybe you don't ride the whole thing. Sometimes you might pull out of the wave because you want to go catch another one, to get that break, that really strong move that happens at the beginning, rather than kind of riding it for a very long time all the way into shore. So
Yeah,
a
I
lot of
think that's a
analogy.
great point. Yeah, you don't have to. Yeah, exactly. You don't have to be the Laird Hamiltons and try to catch the 100-foot wave to enjoy surfing, right? You can get the small waves
Yeah,
and things like that, right? And but get a lot of small waves.
right.
Yeah, a lot of this is making it your own, adapting it to your personality. I think Jesse Livermore did it well, where he would when he saw the markets weren't working and the markets weren't ready to give out money, he went fishing. Right,
Hmm.
he didn't go surfing at that point. He went fishing. He just hopped on
Hmm.
his yacht and went fishing for a number of months to get away from the market. So, and that helped him kind of preserve his mentality and prevent him from getting chopped around and getting tempted by the market, because the market's always going to give you, especially in bear markets, they're going to give you so many reasons during certain times, maybe like now, where they're going to tempt you. Right, the rallies are going to be so strong, and you're going to see your stocks starting to bottom out, and you're like, "Oh my gosh, this is it! Here's the bottom." And like as we've seen, like in March and May, all of a sudden the floor falls out, and we're taking another leg lower. So you can't assume that we're necessarily at that bottom, but you kind of incrementally move in, incrementally move out, but you have to not have to have any worry about the FOMO. Right, you don't
Yeah.
have to worry about the fear of missing out. And when the markets aren't there, and when the markets aren't set up, especially for you, feel the freedom to kind of walk away and take that mental break.
Hmm. Well, and to that point, a lot of people almost feel like they can almost force the market to bend to their will,
Yeah.
and no one thinks that about the ocean, right? You have to go with what the ocean is giving you. You can't just make a wave appear out of thin air, and so you have to just go with what's being given to you, and it's up to you to ride it appropriately. Whether that's through your risk management, your position size, what have you, but. You have to have the right conditions. You have to have a wave to even ride. And right now, that's kind of coming full circle to what we were talking about. There aren't that many stocks out there. So maybe the conditions are great in terms of it's looking like sunny skies, but if there's no stocks to buy, then what do you do? You're just gonna have to sit there and wait for a little while and be patient, and that's okay. So, okay, well, when we come back, we are going to take a look at a few stocks that we saw setting up on our radar. Again, it was a very big day in the market today, so we'll kind of give a quick survey on what the market looked like, what it was serving up on today's action. Stay tuned. We'll be right back. Hey, trader, listen up. The markets have changed. Have you changed your strategies? Vantage Point can help you conquer volatility. Learn to trade with AI. Visit www.freestockcoaching.com and discover how to predict market trends 1 to 3 days in advance with up to 87.4% proven accuracy. No matter which way the market moves, Vantage Point's patented AI can give you a massive edge. Visit www.freestockcoaching.com to get what you need to find your best entries and exits. That's www.freestockcoaching.com. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Welcome back to the Investing with IBD podcast, sponsored by Vantage Point. It's Justin Nielsen here, along with my buddy Irusha Peiris from O'Neill Global Advisors, and it's time to look at some stocks. And as a reminder, at www.investors.com/podcast, you can always find the video version of this. We'll go through a couple charts right now. So we were just talking about sunny skies possibly being in the market right now. What can we look at? Let's take a look at TAN. This is the Invesco Solar ETF, and we had Enphase earnings today. That's ENPH. I do have a position in that myself. I mean, that was up 17, 18% just for the day. Really, really strong move there. But, you know, we also have Solar Edge that's setting up, SEDG. That looks like a decent setup. And then we've got our Chinese stocks, DQ. And JKS, also in the solar industry, that have been looking interesting. So one way to kind of play a number of stocks is to just go with the ETF. And TAN has been one of our favorite ways to play the solar ETF or solar stocks, because sometimes these guys change leadership, over and over, and TAN kind of lets you participate no matter who's leading. So maybe you could walk us through some of the technical action you're seeing here, Arusha. What do you think?
Yeah, well, it's forming a coupled handle here, and couple of percent away from breaking out, so 2% away. And it's overall it's acting pretty well. So it built the cup part where you had an undercut of previous lows, so you had a little bit of a shakeout, came back in. It's built a pretty long handle, but within that handle it's gotten tighter and tighter, and the volume has dropped down, and so it's setting up pretty well here. So it looks like there's some decent accumulation, especially when you look at the volume bars. You're seeing a lot more kind of higher volume bars go to the upside on TAN. So overall, it looks pretty good. Now, obviously, it's not going to be performing as well as some of the stocks that you mentioned, but it grabbing all of those together, it could have a chance here. The whole group might have a chance to kind of break out.
Mm-hmm. And one of the things that I kind of liked about today's action is, number one, it's getting back above the 200-day moving average line, so that's a positive. If you kind of draw a line, of those tops, a little bit of a downtrend there. It was kind of getting right up to that level, just above it by the close. So that's another positive. And as you mentioned, I think the volume signature on this, when we've been seeing volume lacking in so many individual stocks, and the general market itself, the fact that you're getting some of those volume spikes on the plus side is good. And then the fact that the handle's tighter. Whenever you see something that has a larger percentage move down in the base. And this was 31% for the base, but I mean, if you look at the weekly chart, it was significantly off its all-time highs. So when you kind of see that tighter action, kind of gives me a little bit more of a sense that, hey, it's getting a little bit more comfortable with the prices that it's at right now. There's not as much price discovery. A lot of price discovery to me usually means uncertainty. And sometimes that uncertainty can work in your favor as it's going up and up. People are saying, hey, we don't know how high this can go, so we're just going to bid that thing up. But it can also work, to the downside, where it's like, hey, we don't know how much lower this can go, and fear can kind of take over. But any parting thoughts on TAN, relative strength line, relative strength rating?
Relative strength lines in your 52-week highs. The RS ranks at 90. And this is also looks like a bottoming base, right? Ken Shreve was on a few weeks ago. And this looks very similar to the type of basis that he was bringing up there, where the stock sold off a lot. And also the cup overall looks a lot more constructive, especially compared to the cup that formed in 2021. And so I think it has, on a technical basis, a lot of things going for it.
Mm-hmm. And one final thing, the industry group, now, of course, TAN is in the finance ETF group, but if we take any of the members of this, Solar Edge, for instance, or DQ, and you look at energy solar, number
There you
2 out
go.
of 197. So a number of things going for this. We did put this onto both Leaderboard and Swing Trader today. For Swing Trader, we kind of waited until after the Fed announcement, made sure that it was kind of holding up okay. But yeah, this could be actionable right now. So
Yeah,
let's
and
go.
Justin, I would say this is also the Energy Solar's number 2. That's another growth industry group within the top 10. So there's a couple of them there. So this is one to keep an eye on.
Okay, now speaking of energy, let's switch to energy drinks and go with Monster. The ticker symbol here is MNST. And there's a few things about this that kind of strike me. Number one, and looking at a lot of the setups out there, and again, I'll go through a few hundred charts looking for stocks out there, and it's been slim pickings, but it seems like a lot of times when I'm going through a lot of charts, I help out with the IBD Live watch list and ready list, and I'm still seeing a lot of defensive names show up. And, beverages, whether it's alcoholic, non-alcoholic, the food, areas, when you start seeing, oh, look at this nice pattern, and it's, post cereal or Kellogg's, that's kind of what we're seeing. Our Hershey's and Campbell's soup, this is where a lot of the setups are right now. And so, beverages, non-alcoholic, that group is, it's 64 out of 197, so not too bad. But what's your technical take on what's going on with Monster right now?
Yeah, a really big base that it's forming. So I'll switch over to the daily chart here. So a dare I say a monster base that it's forming. But so a lot of times when I see these kind of large bases forming, when they break out, a lot of times they'll kind of pull back and a former tighter range, a tighter range, or even another base.
Mhm.
So that's the first thing that comes to mind when I see a big base like this. But over the last few weeks, it has tightened up a lot better, right near the top, right near the pivot here, and so it is acting better. I agree with you. I think this is one of the ones that, if you're really looking to get into the market and you're looking to using our strategy, or at least using patterns and buying breakouts and things like that, this would have to be near the top of your list, because it has been acting well. And the relative strength line looks pretty good too. Very, very strong here over the last few months. And so, not the most exciting stock. It's not 2004 when Monster was changing the world,
Right.
but it is still doing well. But I think when we're the reality, and you were kind of getting at this before, Justin, when we're looking at a monster stock like this, or a monster beverage in this type of group, that's telling you everything you need to know about the market.
Mhm.
This is where the money's going for the most part. It's still going to the defensive areas, and this is just more evidence that, at least to me, it's not our perfect type of environment that we generally thrive in.
Yeah, and I like that you made the distinction that this is not Monster back when it was called Hanson's Natural,
That's right.
right? When it was called Hanson's Natural, the Monster beverage was something that was kind of just revolutionizing that company and leading to a huge move. You can actually see it on the monthly chart if you go to the monthly chart and take a look at again that monster move that you can't even see the whole thing. It's it was so big. And this was I know this was on the small cap Nasdaq. It wasn't even trading on the
Wow.
regular Nasdaq. When it first came to our attention. So this is more mature now. So again, it's not the same thing as when it was coming out of that. This is now a more mature company. Maybe you could look at Celsius Holdings as kind of in a similar spot where it's kind of having that monster move, that monster type move.
Yeah.
But this is it just seems a little bit more defensive in nature now, as opposed to that move before. And let's go ahead and round out the discussion with a look at we've been talking a lot about healthcare names, but let's take a look at one we haven't been talking about so much, and this is Perrigo. So talk about a blast from the past. This is one that we were probably looking at like maybe a decade or so ago. And they're into the pharmaceuticals, but the generic, right? So all of these companies, when they lose their patents, someone's got to come up and pick up the over-the-counter generic version, and Perrigo is does a good job with that. So here we have another thing that's looking a little bit more like that bottoming base? Not our typical, hey, this is something that's making new highs. This is something that's been kind of in the doldrums. So what kind of put this on your radar?
The fact that it is forming a base, a potential bottoming base, and it's gone tight for like the last 5 weeks. It's essentially close to the same price for the last 5 weeks. So
Hmm.
that kind of stuck out to me. So it's holding up pretty well. The relative strength line is pretty decent over the last few months here. Volume isn't necessarily that great, and it really honestly, I mean, it's funny. I mean, this goes back to 10 plus years ago when this Perrigo was maybe, let me go to the monthly year. I mean, maybe it was a much more of a growth year stock at that point. Yeah, it
Hmm.
went on great runs there. And I remember back then when we were looking at it and it was coming up on our radar as more of a growth stock. So whenever I see this name, it's like, oh, maybe that it's ready for another run. I don't think it is. It has a lot of work to do.
Hmm.
It's essentially come back to those 2010 levels, which is kind of interesting here.
Hmm.
So we'll have to see. Maybe some of these big drugs. I haven't done enough research on it. Maybe some of these big drugs are going off their patents, and Perrigo is going to be able to pick them up or something. And so maybe that's exciting, or it could just be what we've been talking about for this whole show. Stock, a lot of money is moving more towards defensive stocks and trying to find a place to hide out until the next bull market's ready.
Hmm. Right. Now, one of the things about this is, the fundamentals aren't that great. And is that something that you're kind of letting the technicals tell more of the story right now when the fundamentals aren't so great on something, especially when you're in kind of the medical area? I mean, we certainly see that in the biotech area, where sometimes you don't have any fundamentals. Sometimes you don't even have any revenue yet because they might have this um, this treatment or this drug, and it just hasn't come out yet. It hasn't gotten the approvals. It hasn't gotten the distribution out there. So what do you do with a stock when it's got poor fundamentals, but estimates are looking strong? So again, is the market looking forward? 6 to 9 months. Is this truly bottoming?
Well, we'll have to wait and see. I mean, the first thing it needs to do is break out of the space, and let's see if it can hold it. It still has a long ways to go. So, honestly, I mean, this really does not come up on my radar too much. It's not going to come through a lot of my screens because it doesn't have the earnings. It doesn't have the sales. It doesn't really
Hmm.
have the technicals even. It doesn't have a lot of the stuff that we look for, but it's slim pickings right now. And so it is coming up on our radar. I found this on the near pivot list where it just kind of like, oh, Perrigo, here's a blast
Hmm.
from the past, and it's going tight for a while.
It was also on the tight areas
Yeah. Oh, there
screen
you go.
too. Uh-huh.
Perfect. So there you go. So, and that's why we created those screens, just to give some history. So you could find stocks in a few other ways. They're not necessarily like, so something like this. Would I ever consider buying it? Would this be like up at the top of my buy list? Probably not. It probably would never. It'd be a long time. It would have to get the earnings and sales. It would have to start moving up quite a bit. I'd be willing to watch it go from 40 to 60, right? A 50% move, and then setting up again if all of a sudden earnings and sales, and then maybe I'd buy it at 60, right? So this wouldn't necessarily be a stock I'd be even really considering buying anytime soon, unless it's like there aren't a lot of sort of stocks out there, and I'm just looking to just put a probe in the market. But
Mhm.
honestly, even within the medical area, the healthcare area, there are a lot of better ones out there. But so yeah, so I think this is a good example of y- you want to take a look at everything, kind of like what we did here with the Perrigo, and say, this doesn't have a lot of the stuff. Ideally, the stocks that we're going to buy, there aren't any perfect stocks out there, right? But the
Mhm.
the goal is to find the stocks with the least amount of flaws. And when you just quickly look at this, there are plenty of flaws in this stock where it would be pretty far down on the list for me to consider buying it. I'd rather take a chance on some of these other stocks that have a lot more things going in its favor on a fundamental and technical basis.
Mhm. And a lot of times, again, you can have a lot of flaws, but if you have some things that are very compelling, there's some new product or new service,
Right.
and you again see something looking forward that could, really really change the way we do things. That's where you're kind of getting something to balance that out. And again, the estimates, going forward, those are impressive, but that's not always enough. So this is sounding like a wave that you might be passing on.
I'd pass on this wave. I mean, the other thing is going back to, if there's that story, right? The way I always look at it is, does a stock have fundamentals, earnings, or a story? And a
Hmm.
lot of times, if it has two out of the three and the market's good, I'll take a shot, right? If the
Hmm.
story's really good and it doesn't have the fundamentals just yet, or not a lot of great fundamentals, but it has a strong chart and a great story, and it's breaking out, I'll take a shot at it.
Hmm.
The difference is, as versus those type of stocks versus a Perrigo, is Perrigo's been around for a long time, right? This has been around for 30 plus years here,
Right.
right? A lot of times those ones that have a new story, they're a new, young, innovative company, usually more technology related,
Hmm.
that they're starting to do something within the kind of the tech field that people just don't understand yet, and so they're really kind of expanding in a massively growing market. So it has a lot of tailwinds
Hmm.
behind it, kind of pushing it up, and obviously then you're also in a strong market that's rewarding those type of stocks. We're like in the opposite of that, where we're in a market where it's looking for strong earnings, good valuations, all this kind of stuff, versus kind of the growthier stuff that a lot of times will gravitate towards when the markets are rewarding those type of stocks that don't necessarily have a lot of great earnings, but they have that great story.
Right. And I mean, this is something that we see in retail a lot of times where, maybe you've got this retail idea and, it starts in one area of the country and then it's an expansion issue. Bill O'Neill was often
Mhm.
kind of lamenting the fact that Home Depot started in Atlanta. He's like, man, if this had just started on the West Coast and I had seen it, then it could have been a different ball game. I might have been a little bit quicker to get into this, but Price Company, that did start over here. He saw that initial one down in San Diego, and he's like, hey, this is something. And then again, when you go from that one or two stores to 100 and then beyond that, so yeah, as you said, there's got to be some type of story there. So and not a bad idea to kind of look at the fundamentals, the technicals, the story, the market. You get 3 out of 4, and now you're talking about something. So, well, thanks for surfing this podcast with me here, Arusha. I appreciate you being here. And next week we're going to have on the show Tasha Keeney from ARK Invest. She's an analyst over there, and so it'll be really interesting to kind of pick her brains on some of the things that they're looking at over at ARK Invest. So, hope you join us for that. Thanks a lot for watching us this week. We'll see you next time.
Make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.